what's the difference between the gross income and the net income in Germany? Today we're going to talk about this topic, so welcome back to G-Tax. My name is Roland Elias, I'm a German international tax advisor, and today I'm going to tell you the difference between the gross income and the net income. So let's just start with the gross income. The gross income, already known as gross salary, is the so-called contract salary. Contract salary is this kind of salary you deal out with your employer. That means this is the thing that's in the contract. Very important, it's not the money you get paid out, because in this case it's before deductions. We will go into these deductions, but this means these are the gross, and then we have some deductions, and then we go to the net. So this means before deductions, no take-home pay. That means you have to tax it. You have Social Security. It's the basis calculation where you say, okay, we have the gross, which depends on all the salaries paid in the company, and it's the whole employer reference. Then, if you go down and say, okay, how much do I get paid out? This is the next thing. Then there comes income tax, Social Security, church tax if you're Catholic or Evangelion, solidarity charge if you're above within the lines, and additional contributions. So income tax, it depends on the height of your income, your annual income. So this means, for example, you're with round about 30,000 euros a year or 50,000 euros, you're between 25 and, for example, 40% up to in income tax. But there are some deductions. These are Social Security, for example, retirement insurance, then for health, for elderly things, then for unemployment. These are the 4 deductions in Social Security. Very important, in the internet you will find some ways with around about 20% retirement insurance. That's true, but all of these numbers, percentages you find on the internet are split up. Half of it gets paid by the employer and half of it gets paid by you. That means your gross is just your gross income or gross salary. Above are all the Social Security parts your employer has to pay. For example, these are up to 20% up. That means the gross is your gross, but there's an employer gross which is above where the Social Security is included. So then, which gets deducted from your is the other half of the Social Security, and then the taxes. So in this case, these are the monetary contributions shared with employers, employer, employee, and there's not income tax. That means all of these deductions and Social Securities are just before tax. And then we will look up where is your net gross for taxable income. This is the thing that gets taxed. Then this is a monthly withholding of Social Security, for example, taxes, and all of these, but it's not the final tax. At the end, you can go and say, okay, I will file my taxes, for example, for 2025, and then you can say, okay, I have some other deductions, I have some foreign income, for example, and then it gets, or for example, you have your final tax payment to do. If it's above, if your all other income is above that what your employer has withholded, and if it's down, then you get a refund. So that's the difference. So the big thing is you have to think about 40% of your gross is away. And this is a big shock for many foreigners who come to Germany, because they say, what? 40% of my income? That means from the gross income, I only get round about 60% paid out. Yes, that's the horror truth. So now you know why it's important in Germany to look at the taxes, because there you can save a lot of money. So 40% gone and the 60% are the net. This is the money you get paid out. That's the home takeaway money.